Hello, everybody. My name is Paul Buitink. Welcome. Today I'm speaking with Jan Nieuwenhuijs. He's a gold and financial analyst over at Voima.com, which is a bullion dealer. And we're going to talk about the IMF and its reserve asset SDR. Will it gain in importance in the international monetary system? Will it help emerging markets to solve their funding crisis? Jan, welcome.
Thanks, Paul, for having me.
Yeah, we're going to do this in English, by the way. I can imagine that some Dutch listeners will think like, why are you guys doing it in English? But we checked on Twitter and there was a small majority that preferred us doing this in English. So we have to stick to the majority rule, 50.3% was it?
Yeah, it's good. I think with English we can reach a lot more people.
That is true. And it's an important topic, of course, the SDR. A lot has been written and said about it, but it's also a lot of uncertainty about it. So we're going to dive into it. But first, I would like to share a few figures, what's going on right now in the emerging markets, because it's quite bad and sad, actually, what's going on. Around $100 billion has already left the emerging markets over the past few weeks, much more than during the previous crisis. And total outstanding debt in the emerging markets is $5.3 trillion, and 730 billion of that needs to be repaid this year. And a quarter of the emerging market loans are in the hands of US and Europe, and 80% is denominated in dollars. So there's a huge run going on the dollars, and a lot of dollars are leaving the emerging markets, and it's very difficult for these countries to actually gain dollars now, of course, but also because exports are down. And so they are in a dollar crunch. That's why the Fed has opened extra swap lines and repo lines to help foreign central banks. But yeah, is it going to be enough? Probably not. So the IMF is also calling for more funds, more firepower, and also more SDRs to be created for more liquidity.
Last time I wrote it down in 2009 was, I believe, 180 billion new SDRs. In 2009 as to try and calm the markets and to create some liquidity. Didn't help, in my opinion, but they're going to try it again.
Yeah, so definitely a hot topic then to discuss. But for let's just start at the beginning. What is an SDR? A lot of people have no clue.
Yeah, it's a very good question, and let me try and explain. So first of all, it has nothing to do with gold or even paper. It's just digital book entries. One definition of the IMF is that it's a supplementary international reserve asset. So it's an asset, financial asset, that can be held by monetary authorities such as central banks, but also the BIS can hold it. So that's basically it. And further to explain it, it's not a currency, nor is it a claim on the IMF, but it's a potential claim on freely usable currencies issued by IMF members. So that means that there's also no free market to exchange these things. But what it means is that the IMF can issue new SDRs. The SDRs are allocated among the IMF members. And then if a central bank holds these SDRs, they can try to exchange them for freely usable currencies through what is called the SDR department at the IMF.
What is a freely usable currency then? Is that
freely usable currencies is currencies that can be freely traded in international markets. So you can think about the dollar, the euro, but also the Canadian dollar or whatever. Yeah.
Okay. So, but a lot of people think it's actually, like you said, a claim on IMF or something to do with the IMF balance sheet, but it's distributed amongst the IMF members, but it doesn't sit on the IMF balance sheet, right?
Correct. It's the IMF cannot issue SDRs to itself. So it gets a bit complicated if we go in too many details, but IMF members also have to pay a quota to the IMF. And so it can receive SDRs. It does also maybe for when loans are being repaid. You know, the IMF is very most famously known actually for loans it disperses. It can be repaid in SDRs, but the IMF cannot say, hey, we create for ourselves 1 or 2 trillion new SDRs. The SDRs only go to the IMF members. and there are 15 prescribed holders. That means there are 15 other financial entities in the world, such as the BIS, that can hold SDRs, but they do not get SDRs when new SDRs are created.
Right. For example, I checked the balance sheet of the Dutch central bank, and I noticed you had 6 billion of SDR holdings on the asset side and 6 billion of allocations on the liability side. So it's just sitting there, but clearly DNB is not doing much with it. It's sort of when they're issued.
They're flat.
Yeah. So when it's issued, their balance sheet becomes longer, but it's neutral to a certain extent.
Yeah. So what happens is that when new SDRs are created, they're dispersed to national central banks. And on the liability side of the central bank, SDR allocations are increased. And on the asset side, SDR holdings are increased. Now, if you get 1 billion in SDRs, for example, at a central bank balance sheet, that initially nets out. So you don't actually have anything. You can say you're wealthier, but I would say nothing changed. The thing is that what happens is that people pay the SDR interest rate on SDR allocations. It's on the liability side. And they receive the SDR interest rate on SDR holdings. Now what happens if, for example, an emerging market has some new SDRs or old SDRs, and let's suppose they begin flat. What they can do is with these SDR holdings is try and exchange them for freely usable currency. So they can call the SDR department at the IMF. They can say, well, I have here, let's say 100 million SDRs. I would like to exchange them for dollars. The SDR department then goes looking, or maybe they have some other countries willing to do the swap. And if the first country I started about succeeds, it exchanges its SDRs for dollars, and then it has less SDR holdings than SDR allocations, and it would start to pay the SDR interest rate.
Okay.
That's how it works.
Yeah.
It's a really synthetic product.
Yeah, and
it's highly illiquid, if I may say.
Yeah, and it's also that the interest rate is very low, right? So it could be useful for a country, for example, an emerging markets country, to get rid of their SDRs and get useful currency, something that they can use for their financing or funding, like dollars, for example, because on their allocations they don't pay much interest. They would pay much more interest if they would get a loan from IMF itself.
That's correct. But if they are selling their SDRs, for example, dollars, then another central bank has to sell its dollars for SDRs. So maybe another central bank has dollars, and then that's a foregone opportunity to maybe there is of course a case. For example, the Chinese central bank has a lot of dollars and likes to diversify a little bit, but maybe we go into detail later, maybe on this. It's also a risk for a central bank especially for the Chinese central bank, to collect a lot of SDRs, because the SDRs can be changed every 5 years. The essence of the SDR is changed, or the basket is changed, or the whole thing is changed. So if you have a lot of SDRs, you don't really know what you own in about 5 years or 10 years.
That's a good point. Can you explain a bit more about what happened in the past then? Because it's been around for a few decades and it has changed a few times. Could you elaborate a bit more how it came about and what kind of shapes and forms it already had in the past?
Yeah, so it was created in 1969 when the Bretton Woods system was collapsing. As you know, the dollar was back to gold, and more dollars created than they had gold in reserve. So there was the run on gold, and the system broke down, and the IMF, which was created after, at the same time with Bretton Woods, to manage balance of payments indifferences, problems. So what the IMF did in 1969 was they wanted to create paper gold. They called it paper gold. It was the first time the paper gold, the term, was introduced, because they wanted to create a new international reserve asset to replace gold, because they saw, well, gold is nice, but there's too little of it. We want to create more of it. So they created SDRs. And in the beginning, it was defined as a weight of gold. So the first SDR was defined as 0.88 grams of gold. Now, because it's paper gold, or no, let's not say it like that, but it had nothing to do with gold. It wasn't just like the SDR now, it's not backed by anything. So the first SDRs couldn't be redeemed for gold, just like SDRs now aren't backed by anything. And you can always say, hey, I want the underlying. So it started as a piece of paper, let's say, defined as in a weight of gold. Then it slowly changed. They said, well, okay, this doesn't work. Then it became the value of the SDR was defined in a basket of 16 currencies, and the interest rate was calculated in a certain way. Then it became 5 currencies, and the interest rate was changed. Then became 4 currencies because of the euro, and now it's since 2015 it's 5 currencies again because the Chinese renminbi is added. So, and maybe I forgot to say this in the beginning. So the value of the SDR is defined by the basket of currencies. So the SDR is not a basket of currency, but the basket of currencies defines the value of the SDR. So you have several inputs that go into this calculation, and then every day a new SDR value is computed.
Right. So every 5 years they're revising it to see if it's still properly reflecting the world economy. And last time the renminbi was added. Do you expect any changes this year, basically, because this year it will be revised again?
No, I haven't heard anything about it. I don't expect. I haven't seen any major changes, so I think it stays like this actually for this round.
Yeah. So, or maybe the weights will change a bit, because of course the world trade weights have also changed over time. But you don't expect at least another currency to be added to the so-called basket, even though it's not a basket.
No, I don't expect it. Actually, no.
So you also said it was not a currency. I also read it on the IMF website that it's not a currency, but a lot of people refer to it as the IMF's currency.
Yeah.
Could you elaborate on that a little bit more?
Yeah. Well, first of all, I think a lot of people talk about the SDR, but they don't really know what the SDR is. I see a lot of talk. I hear a lot of talk about the SDR while they. They haven't read the literature, I think. But what was your question again?
Why is it not a currency then?
Because, sorry. It's not a currency. Well, first of all, it's not. Only central banks can hold it, and you and I can't hold SDRs. So it's also you can never pay anything with SDRs. So that's why it's not a currency. It's not a medium of exchange. And there's no free market. There's no free market in which excess supply or demand can meet, and the value of the SDR can be changed. So, and because there's no free market, and because it's not a currency, those are the primary concerns of me. That it's just a boondoggle.
Yeah, it's not a means of payment. So you always money should either be or should be unit of account. A means of payment, a store of value. Maybe it's a store of value. Maybe it's a unit of account. At least the IMF is using it as a unit of account, which I find very confusing. If you read the IMF annual report, everything is denominated. It just doesn't read well. It's a bit of you feel like.
But that's very psychological, right? I mean, you're very used to dollars. And you don't pay in dollars in your country. I know, because you live in my country. So it's very psychological. Or you moved in since yesterday, but right. But another thing I wanted to say is that everything in the free market, everything in the economy, like say apples and cucumbers and sweaters and cars and bikes and money like euros and dollars, everything can be exchanged for one another, right? You can sell an apple, you get a euro, but the SDR doesn't take part of that whole system. There's only this IMF SDR department as a sort of a straw in which you have to go through to reach the other side. And then if you reach it, you're actually quite lucky if you reach the other side. But
so in many ways, Bitcoin is more of a currency than the SDR.
Far more. Of course. Also, because that's what I like about Bitcoin actually, is because it's a bottom-up thing, right? And SDR is like it cannot be more of a top-down thing than an SDR.
So the SDR is basically the opposite of Bitcoin.
Yeah, it's the opposite of Bitcoin. That's it.
And what I also
gold, by the way, because gold is even more bottom-up because it's not even man-made. Gold is the most independent and neutral financial asset there is.
But at least there's a few bars I can spend my Bitcoin. I still have to find the first bar I can spend my gold.
Well, actually, we at my company, can you spend Bitcoin in every store?
Well, we have a town in Holland called Arnhem where there's like a Bitcoin street and many bars and restaurants. At least back in the day, you used to accept Bitcoin. Yeah, that's true. I had another question. What I really find interesting also, and let's say I have SDRs, and I'm an emerging market. I need dollars, and dollars are difficult to get. So I want to exchange my SDRs, my holdings, into dollars. But I call the SDR department, and the IMF doesn't have a matching seller of dollars. So, but I still want to exchange my SDRs.
Yeah.
So how does that work? Can they force a central bank to part of their dollars and exchange for my SDR?
I doubt it. If I read the literature, then basically you have two mechanisms to exchange SDRs. What I previously said is called the VTA. It's the Voluntary Trade Agreement. So most of the time, SDRs are exchanged through the SDR department. They can also do it bilateral, but it hardly happens. That's the VTA option. So, and then there is the other option, like you just said, there is a country and they want to sell their SDRs. We're constantly talking about selling SDRs. Nobody's buying this, right? But okay, so it wants to sell SDRs to obtain dollars. Then the IMF could say and it says in the literature, if another country has a very strong balance of payment, it can be designated to exchange SDRs. But I don't think that the IMF really has the authority to, I kind of know for sure, to say to the People's Bank of China, hey, you have to exchange $500 billion now in SDRs.
Yeah, but Jan, here, reading on the IMF website, in the event that there are not enough voluntary buyers of SDRs, the IMF can designate members with strong balance of payments positions to provide freely usable currency in exchange for SDRs. This so-called designation mechanism ensures, my emphasis, that a participant can use its SDRs to readily obtain an equivalent amount of currency if it has such a need. So yeah, clearly it's possible.
It's possible. The designation mechanism has never been used in the past. I've read it's I believe it's called the IMF Financial Statements 2018. It's this book they publish every year. It's free. You can look it up on the IMF website or read my article where we can put below.
Yeah,
this,
for sure.
video.
That's
everything is in there, all the links and stuff.
Okay.
So but what you just read, it reads the word ensures, right? So you're insured, you can exchange for SDRs. In other literature, I've read the word can or may, or it's a bit vague. But in the end, you have to think about, is the IMF some kind of supranational organization and has the authority to say how central banks have to manage their international reserves? I don't think so.
Well, it's a member club. You and I a member, but there's 189 members, and with US of course being the biggest shareholder or member because of their big quota. But I'm sure they can decide based on majority votes. For example, how many SDRs are created. If they're going to, let's say the 500 billion that you mentioned at the start of the conversation, I'm sure they have a board of directors being supported by a majority vote to come to those decisions, right? It's not like they can just create that amount without consulting or without getting a majority vote from their members, I assume.
Well, the voting power in the IMF is based upon the quota of the countries.
Yeah.
So the US I think has the most votes, and so everything is decided along those ways. Of course, there's also a board of directors on top of that to think about stuff. But yeah, I still don't think they have the. It's like the UN. The UN also is, it's a way for us to communicate with each other, all countries. But very often, if there's a war in the world, the UN is kind of helpless, right? I mean, they can't. Sometimes, really, sometimes they bring in the blue helmets, but it's not that they have like global power.
Yeah. Do you expect them to keep on issuing SDRs over the coming months as long as the crisis continues? Is this just the first shot they fired, or?
This is going to be very interesting because I just told you my analysis, and I don't think it's going to help anything. I don't think the SDR market is very illiquid. And also, I don't know if I just mentioned these numbers. So in 2009, they created 180 billion SDRs, but in the 12 months following 2009, or when the SDRs were created, only 3.2 billion were exchanged. So it didn't really do anything.
No, but if you look at it, I'm now looking at the overview of all the holdings that all the countries have on the previous allocations, and a lot of poor countries that suffered a lot and needed financial assistance, they've used up all their allocations. Like for example, Ukraine, they were allotted 1,300 billion SDR, and now they have left
1,300 billion
million. So 1.3 billion. And they have left 69 million. And a lot of poor or developing nations have been using their SDRs, have been swapping them for freely usable currencies. So if the IMF keeps on adding them to the system, then at least it will provide a very easy and also cheap, because the interest rates are very low, way for developing nations and emerging markets to get their hands on dollars and euros, whatever they need.
Yeah, I think, but we touched on this previously. You keep seeing it from the how can you exchange SDRs for dollars, but you also need a counterparty that wants to exchange their dollars for SDRs. And if there's no counterparty, there's no trade.
And so that's also a weak point, you think, right? Yeah, okay.
Yeah, and also there's no free market to resolve this.
Yeah, but so your thesis is that no matter how much they create, they could run into the problem that some central banks will not sell their US dollars in exchange for these.
Well,
SDRs.
maybe some of them will. Maybe some, if they issue now, they're going to issue 500 billion new SDRs. Maybe some emerging markets will manage to, and also with the consent of the other party, will manage to exchange them for dollars. But I still think the SDR is. It will always be what's also literally said on the IMF website. It will always be a supplementary international reserve asset. So it will never be a big thing. And it's mostly about symbolism. There are a lot of people, there are some people talking about, we need to, like Wim Boonstra, that's an economist you have interviewed quite often. He has also written an article about SDRs. But yeah,
what's his point of view?
He wrote a paper about the SDR. You should read it. I think you find it interesting, and about how it can be developed into something that can actually be used and have more benefits and really an advantage for the international monetary system. Also to again, of course, what we all want is get rid of the dollar and have be less dependent on one country and its monetary policy. But he, again, in my opinion, doesn't really go into the details of how it works, and so I don't.
That's a good point. It's a good point you make, because also the People Bank of China has been positive about the SDR. You also referred to them in your article. Why would they? Because of course they don't like the fact that the dollar is still the world reserve currency. So they would like to move to a new world where. Possibly the renminbi is playing the dominant role, or maybe there's a basket of currencies. So in that sense, I understand why they're positive about the SDR. What do you think of those comments then made by the People Bank of China?
Well, I think the People's Bank of China and China in general, they have been growing a lot, their economy, and they have opened up on their current account, not capital account. And what they want, of course, is the advantages of issuing a reserve currency, because you can print some money and buy some stuff abroad, oil or goods, services. So what they want to do is they want to steal market share from the US dollar, and they want to get rid of the US dollar. The US is, of course, also very powerful with the dollar, because they can put sanctions on countries. But to boil it down, is they want to steal market share from the US dollar. So they like to talk about SDRs just to distract from the US dollar. And also, there's another point. If you, like China, they have come up rapidly with their economy. If you come up with a new currency, and their currency is the SDR, was a seal of approval that their currency was an international reserve currency. So that's why they were promoting the SDR and talking a lot about the SDR, and it was such a big thing for them. And second of all, yeah, what I just said, they really like to distract people from the US dollar. So what the PBOC also does is they publish their international reserves denominated in two currencies, the dollar and the SDR, although the SDR is not a currency, but unit of account, it's a unit of account. It's primarily the unit of account of the International Monetary Fund. But so those are the reasons. It's politics, it's symbolism, it's politics, it's also, they talk about gold sometimes, but not too much, the Chinese, because they know if they talk too much about gold, or would be really honest about their official gold holdings, the price would escalate, and they could buy less gold with their dollars.
But it's funny what you just said, because in another article you wrote that central banks like high gold prices, and a lot of people say, well, central banks try to suppress the price of gold. You say no, central banks have started to like gold and they like higher gold prices. But it's you now say the Chinese central bank doesn't like gold prices to go up that much. Is there?
So every central bank is in another position, right? So there have been signs, by the way. I'm going to maybe write an article about this someday. That, for example, the Dutch central bank sold a lot of gold in like in the 90s, in the early 2000s, and when there were some after the crisis in 2008, there were some questions about these gold sales in our, how do you call it, Parliament, Tweede Kamer. How's that called in English properly?
Yeah, Parliament.
Parliament, yeah, right. So Minister De Jager, maybe some people know him, answered the question, and the question was, why did we sell so much gold? He said to allow other gold holding nations with lower levels to obtain more gold. So maybe in the current, in the past several decades, there was some kind of unofficial agreement. Yeah, some, if we spread the gold a little bit, that would be beneficial for all, actually, as a backstop. So, but fast forward to now, I think the Chinese in the past few years have been not honest about how much gold they own. So, because, after 2013, the price went down by 30-40%. And the Chinese bought a lot of gold. They really like those low prices. And if the PBOC would have been honest about those purchases, of course, the whole world would. Those are, central banks are like elephants in a small room, all of them. So they have to move very slowly and move cautiously, and none of them want shocks in the system, because it doesn't help anybody. So that's why that's what the People's Bank of China did. Now, Western Europe central banks are in a different spot, like the Dutch central bank, the Central Bank of Austria, Central Bank of Germany. They have enough gold, and they have been communicating differently about gold than, say, 10 years ago.
What's enough then, Jan? How do you decide whether it's enough? I'm sure they would love to accumulate also for lower prices.
Well, they don't. So they don't, and actually they have sold until 2008. And I just gave you actually this example of this minister of finance that says in Parliament, we sold some gold. One of the reasons was that we allowed some other gold holding nations.
Interesting.
I can put this link up, this letter underneath this video, to allow some other gold holding nations to catch up. It's very remarkable. So was it enough? I don't know. What I do know is that the central bank of, let's say, the Netherlands, although we don't have any authority, of ourselves because we have the European Central Bank, but in general, if you like a central bank now, if you're buying bonds, it's crisis. If you're buying a lot of bonds and you put them on on the asset side of your balance sheet, these bonds can lose value. And if the price of gold will rise, the increase in the nominal value of the gold on your balance sheet makes up for the losses of other assets. So the Dutch central bank, for example, sorry for my bad English, the Dutch central bank, for example, started talking very differently about gold. First of all, to make people aware of gold and to sort of signal to them like, hey, it's not a bad idea to own gold and get out of risky assets. And secondly, by doing that, they create a sort of a psychology among the people to move towards gold, and that's very much always associated with a flight out of currency, and it can spur inflation, move the gold price up, and fix balance sheets.
Yeah, well, they definitely have a few things to fix on their balance sheet. So I understand.
Well, I haven't looked lately, but the ECB is buying a lot of Italian debt now. So yeah.
Yeah, and it's all, of course, allocated to the local central bank balance sheets. And there's a huge target 2 claim as well on the Dutch central bank balance sheet.
Yeah.
Yeah. So okay, I get your point then, that it's so you're basically saying forget about SDR. Gold is going to reestablish itself as the global currency, or
no, it's very hard. I don't know. I really don't know. But given what I see, and also the gold price a little bit rising now, and it has been for very slowly from 2015, and now a lot more fast. I think a lot of people, there is just so much. There are so many bubbles in the world, financial bubbles, and I think gold will gain some ground because it's the only internationally accepted financial asset without counterparty risk. It's completely independent of the financial system. So the only way to insure yourself against calamities is with gold. You cannot say, you cannot hedge yourself.
You work for a gold dealer, Jan. You have to say that from your employer.
That's a very good point, and I know I'm biased. I just know, and you can call me on everything I say and on my logic, but I still believe this. So.
Yeah,
sorry.
well, I used to work for a gold dealer in the past too, and I still own gold because I see all the problems in our financial system. So it sounds like a safe hedge to have, and especially since central banks are now increasingly vocal about owning it. So why would I argue with them, right? It makes sense.
It just makes a lot of sense. And if you look back throughout history, I mean, we're entering a very severe depression now. We have a lot of debt. I think the high debt levels in the world is the biggest problem. You can only go out of debt at this point. There are 4 ways to get out of debt. It's raise taxes. It's not going to happen. Spend less. It's not going to happen. Default on your debt, maybe, or inflation. And I think it will be a combination of the latter two. So maybe defaults on some debt, or debt restructuring, or inflation.
No, exactly, because higher taxes and lower expenses we're not going to see over the next few years.
No.
Expect a lot more SDRs to be created the coming time, which will increase, which will lengthen all these balance sheets. It will blow up all these balance sheets. But if I follow your hypothesis, they will just stay there because at some point central banks are not going to sell other dollars or other currencies for them, and I believe that they're going to be pressured enough to come through with those currencies in order to help the emerging markets. In that sense, it will become bigger. I mean, the bigger it gets, the more of a household name it will have, and slowly but surely they can change the whole concept to make it become more like a currency, possibly.
Maybe, yeah. I think it's very exciting times because my point is not to be right about this. I just did my homework, and my job is to report on what I think. And but it's exciting. The other thing is that it's what's happening now is that the whole world is in trouble, right? I mean, Italy was first with the coronavirus, and now it's us and the US and whatever. And the word solidarity is being used a lot of the time. So it's also in the IMF literature. They say the SDR thrives or functions on the basis of on the commitments of the IMF members. So if people or countries are very have solidarity with each other, they maybe use this SDR instrument to help each other. But you can also see that a lot of people still have their, shouldn't say people, but countries have their national interest. And so we'll see if the SDR kicks off.
Yeah, so you're saying in Europe they cannot even reach an agreement about helping each other. So why would that happen on a global scale then?
Exactly. So, for example, the discussion in Europe is now about solidarity with Italy, right? So I'm like, yeah, of course. I mean, I feel very sad for what's happening in that country. They have it's more severe there than here. But what about the people in India in 3 weeks' time, or the people in Namibia, or wherever it is? I mean,
so SDR is a Eurobond on steroids.
Well, it's the question to what extent countries are going to be are going to willing to help each other.
Are going to be willing, yeah.
Yeah, are going to be. No, but it's you see it now with food and with medicine, and everybody still thinks about their national interest. So I don't think that everybody's okay. We're in this together, and it would be ideal, of course, or not ideal actually. I mean, it's also based on competition and things. I mean, the economy is not something like, oh, let's just give each other, because it's not productive that way, right? So
yeah, I see your point. Well, let's see, Jan. We're going to have some interesting months ahead. Let's hope the economies are going to open up again soon, so we can start to get things back in order, because this crisis, of course, cannot last for too long. Otherwise, just a lot of people are going to suffer.
Yeah.
Okay. Well, thanks a lot for your time, Jan. It was very interesting indeed.
Thank you.
Yeah. Okay. Let's do this again in the future once we know a bit more about what has happened after this conversation.
Maybe it's nice, in a few months, if they have printed a lot of SDRs or whatever, it can be nice to reflect on this conversation. Yeah.
Will do, Jan. See you later. Bye.